please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, back home on the Wall Street, driven by strong global and domestic cues, the market ended the session on a good note, but it was off the day's high point. Frontline indices have now ended higher for the fourth straight session. Sensex ended 170 points higher, while the Nifty ended above the 9900 mark. But how the cues stacked up for the day today? Manglam joins us to tell us more. Good morning, Manglam. Tell us more.
Good morning, Anisha. So we'll start with the cricketing parlance. You know, the SGX Nifty, for starters, indicates that perhaps there could be a bit of a defense, at least as far as the first over is concerned, 20-point downtick. But remember, the Nifty has gained a lot of momentum. In the last three and a half sessions itself, the Nifty has made a double century, 227 points from the expiry day's low of 96.88 thereabouts. And after 6 sessions, the Nifty has reconquered that 9900 mark on a closing basis. In yesterday's session, the 3-star batsmen were Reliance, ITC as well as HDFC, with a bit of a cameo played by the pharmaceutical stocks as well. We had Sun Pharma, Oro Pharma as well as Dr. Reddy's doing well. From the broader markets, of course, Natco Pharma was locked in upper circuit. The one batsman which is not doing well, let's see what it does today, is the Nifty Bank. That one's underperformed. In the last 3 sessions, while the Nifty has gained 1%, the Nifty Bank has just gained about 0.4%. The mid-caps have outperformed. So the 227-point uptick that has come on the Nifty, as well as the 1.8% uptick that has come on the mid-caps, that is because of good flows. Over the last 2 sessions, yes, the FIIs have been selling, but the domestic institutional investors have been buying as well. And for the first 2 sessions of the October month, we have net flows of close to 812 crore rupees. So that is something we need to keep an eye out on. And not just cash markets, the FIIs have been buying in index futures as well. 3 days to this series, the FIIs have added close to around 1,400-1,500 crores worth in index futures. Started the series with 56% long exposure. Now that has increased to 59%. Not just index futures, we've got some buying coming in stock futures as well. So the last 2 sessions, yesterday in fact, they bought about 1,200 crores in stock futures. So last 2 sessions, close to 2,800 crores bought in stock futures. And I was looking at the open interest. We saw stock future buying across all the major stocks from the index. Yesterday, the key point was index options. We saw a lot of selling in index puts, which indicates that perhaps we could have put a base as far as the near term is concerned. Today, we'll watch out for the weaker batsman, Nifty Bank, because it's the Nifty Bank weekly options expiry. 24,000 put could be a bit of a support, as well as the 24,400 call has seen a lot of writing. As far as Nifty, those are the crucial levels. At the lower end, watch out for the 9,800 mark, and the higher level, 9,950 to 9,975, has the 50 and 20-day moving averages. So keep an eye out on all those things.
All right, Manglam. So 4 days, you know, that's what you're covering. It's the final day of the test match.
Yep.
But let's see which stocks are in focus today.
Stocks in focus today, we start with SBI. They've got a new captain. If you talk about the cricket parliament, Rajneesh Kumar has been appointed as the new chairman. Remember, yesterday he spoke to CNBC TV18 exclusively and said that asset quality improvement and credit growth would be his key priority. So let's see what the street, how the street reacts to that development. M&M is another stock which will be in focus. Remember Ron and Anshu breaking that story where they would have been likely contenders for the e-vehicle. Now they've gone ahead and matched Tata Motors' price. Apart from that, CLSA has also upgraded the stock from outperform to buy with a target of 1,610 rupees. NMDC, you track that stock quite closely, Nigel. They've slashed their iron ore prices by 100 rupees per ton, as well as fines by about 100 rupees as well. So watch out for that, and also watch out for the users of their products. Satin Credit Care, they've launched a QIP at the floor price of 308 rupees a piece.
And we are undergoing a major transformation in terms of adoption of new technology and digitization.
Well, in a big boost for Mahindra & Mahindra, the automaker has decided to match Tata Motors' e-vehicle price for the government's big procurement of electric cars. And therefore, Mahindra & Mahindra will now be supplying 150 electric vehicles in the first phase, and Tata Motors, on the other hand, will be supplying the remaining 250. Ranjay Banerjee spoke exclusively to MD Pawan Goenka and began by asking him what prompted Mahindra & Mahindra to lower its bid price to match Tata Motors' price.
The price that we had to match, the L1 price, is a price that we find perhaps an aggressive entry price. We don't know that. But for us, it obviously was a stretch to try and do that price. Right now, we have matched the price only for phase 1. And that to 30%, not 50% that was offered to us, so that we examine what the possibilities might be for the future. I would say from a distance, it does appear to be a dramatic entry pricing. We have been in this game for 5 years now, so we know our cost very well. And to us, the numbers don't add up. But again, as I said, that we are somewhat a bigger vehicle, so therefore a little bit more expensive. We, I think, are providing a larger range than what is minimum required in the tender, and that also costs a little bit more money. So we would be sharpening the pencil, but I don't think that we could come to the current price that is being offered, and then we'll have to take a call on how much stretch we do. But we definitely would work very hard to see what we can do about this. One thing that we know for sure is that our vehicle is somewhat bigger than what is the minimum requirement for the tender, and that certainly means it's a little bit more expensive also. We will also look at other parameters that in some cases we are higher than the minimum requirement, and see whether in phase 2 we are able to bring the price down. The important thing is that the game has begun, and the very important thing, which I'm delighted, that both the players who are supplying these vehicles are Indian players, using Indian vehicles with Indian technology and manufactured in India.
Well, and as it's, we had some flashes that were up for you on the screen. CLSA, they have said that, in fact, Mahindra & Mahindra is now looking attractive after underperforming the Nifty by 13% in June. They're saying that the upcoming MPVA launch should boost FY19 growth. They expect volumes as well as EPS to grow by around 11 to around 13% for the next couple of years. They're also stating that volume growth is on the uptrend and the tractor business is seeing some strong demand. The SUV business for now, what they say is that it has been a bit of a drag, but there as well, volumes have been improving, though it is on a very small base. So you need to keep an eye out on that stock in today's trading session. It would be a big blow to the centre's ambitious solar electricity drive. Renewable energy corporations of some states are protesting against the diversion of coal cess towards the GST revenue compensation. Telangana, Andhra Pradesh, as well as Tamil Nadu, they're amongst those who are asking for subsidy revision for solar power. Nitya Balakrishnan joins us with all those exclusive details. Nitya, what are the arguments put forth by these companies?
Well, currently the cess levied on coal is close to 400 rupees per ton, and in just the last 5 years, this corpus has been close to 50,000 crore rupees, and originally with the idea of funding clean and green energy projects. But since August, this particular cess has been diverted towards state government revenues for actually any kind of compensation during transmission to GST, and this is clearly worrying the power players across southern states. We're talking about the likes of Telangana, Andhra Pradesh, Karnataka and Tamil Nadu, which, remember, are the majority of solar power producing states in the country. Categorically, what firms believe is that if this particular cess is not used for funding green projects, then they will see no alternative but to hike solar tariffs, which are currently at an all-time low of close to 2.5 rupees per unit. What they seek instead is a tampering or increase in the subsidy incentives that the state governments will provide if they're going to go ahead and, of course, divert the cess towards GST compensation. It remains to be seen what the state governments as well as the centre will decide. We're given to understand from sources that the Ministry of Renewable Energy is likely to be roped in on this particular issue. But clearly, it is causing huge concern, especially for a whole lot of private sector players as well, the likes of Tata Power, Adani and Renew Power, which are actually betting big on solar projects in the months to come.
Okay, thank you, Nitya, for getting us those exclusive details. But on to another CNBC TV18 exclusive then. Rituparna Bhuyan caught up with Baba Kalyani on his take on RBI's status quo policy and growth outlook for this fiscal. Here is an excerpt of that chat.
I think, if the economy is reasonable, inflation is under control, and we don't have any macro financial issues, I think one should be optimistic that there would be rate cuts to give a further spurt to the growth of the economy.
Let me talk to you about some systemic issues. Industry has been talking about, and everyone agrees that GST is a game changer, but rates and the way it has been implemented, that has not gone down well as far as the past couple of months are concerned. My question to you is, The finance minister indicated that perhaps in the future we might bring down the rates. How critical is it to work on the rates as far as GST is concerned?
I don't see that as a problem, okay? Because, okay, rates, it's a structure. There is a rate, it's defined, it subsumes a lot of taxes that you otherwise were paying. There's a single rate of tax. So I think, you know, from a efficiency point of view and from an implementation point of view, it is very good. Now, GST is a complex process in terms of getting it going, because, you know, you have to file the returns, you have to get your refunds, you have to get all these things going. So I think rather than the rates, is the IT process behind it or the system process behind it that really needs attention.
A last question to you is your sense or your take on what kind of growth can we expect in at least this financial year? RBI says it will be sub 7%. What is your take on that?
There is a general consensus that it will be somewhere closer to 7%, whether it's a little less than 7 or a little more than 7. It's a matter of how the next few months and how this festival season generates demand and consumption in all sectors. But I think overall the numbers are looking good. If you look at the numbers of September, whether it's the agricultural side of business, tractors, agricultural inputs, they have shown a remarkable increase. Whether it's, you know, two-wheelers, they have shown a remarkable increase. Cars have shown a remarkable increase. Commercial vehicles have shown a remarkable increase. I take commercial vehicle as a big pointer for GDP growth.
Okay, on that note, let's slip into a short break. But as we do that, CNBC TV18 is celebrating Danotsav. We are getting you some of the top corporates and their social responsibility initiatives. Here is Ajay Piramal highlighting the importance of giving back to the society.
The purpose of our group is doing well and doing good and making a positive difference to the world around us. Our belief is that human beings are the only living organisms which can make a difference in the world around us. And hence, it is our duty and obligation to do that. We are more privileged than many others are in this world. We are privileged because of our education, we are privileged because of the families we are born in, because of the wealth that we have, the positions that we occupy in business and industry, and therefore we should share this with the less privileged ones. So that's the reason why we go beyond the duty.
Let's shift focus to the new kid on the block. Pratap Snacks list on the bourses today. Remember, the initial share sale offer received robust investor demand last week. Mangalam joins us now to tell us what to expect of this listing. Over to you, Mangalam.
Well, Anisha, the IPO was very well received, 47 times oversubscribed. In fact, if you take a look at how the HNIs bid for them, nearly 101 times oversubscription seen by the high net worth individuals. That and the grey market premium of close to 200 to 220 rupees could perhaps give it a good listing from its issue price of close to 938 rupees. Though, bear in mind that a lower price as far as the listing is concerned may aggravate the fall, given the leveraged money would look to unwind positions there. So about the company, it is a packaged snacks as well as a namkeen maker, sells under the brands of Chulbule as well as Yellow Diamond rather, and it is a leading player in the east, north and the western parts, slightly weak in the southern parts. The last year they did a revenue of close to 900 crore rupees with a margin of close to 4.5%, and at the same time they did a net profit of 10 crores. But the management and analysts indicate that was an aberration. They expect 30 crores, 35 crores in FY18 plus 45 to 50 crores in FY19. Even if the company does post that, and at these prices, the company would trade at 63 times FY18 earnings if it lists at the issue price, and if it lists at a price of 200 to 220 rupees higher, it would trade anywhere between 70 to 80 times FY18 earnings. So that way, from a PE perspective, it looks a little expensive. Need to keep an eye out on EV to EBITDA, price to sales, and how margins go going forward, given its peer, which is DFM Foods, which trades at around just about 58 times. On all parameters, DFM Foods trades at a lesser valuation than Pratap Snacks, and it has higher return ratios as well, namely return on equity as well as ROCE. DFM Foods has higher margins as well, so going forward for Pratap, we have to keep an eye out on the margin trajectory. There are a bit of concerns. The first one is the margins, which have been inconsistent over the last few years, though we need to watch out for the growth potential. They have just about 8% market share. Let's see where they go going forward.
Okay, all right, Mangalam. So we're going to be in for a snacky day. We'll be looking at Pratap Snacks, and also we'll be looking at DFM Foods. Yesterday, in fact, DFM Foods was up closer on 4.5% by the time we did wind up. But Mangalam, since you're with us, tell us how you're reading the derivative action.
Well, it's fairly positive, Nigel. You know, the first thing that really stood out during the intraday, we were watching out for the Nifty futures premium. After declining to single digit, it has expanded to about 16 points from about 9 points. So that was a positive, given that it indicated some sort of demand at all levels for the Nifty. The FIIs, they've been buying in index futures. So over the last 3 trading sessions, they've pumped in close to about 1,400, 1,500 crores in index futures itself. Index options, yesterday there was a sell figure of close to 200 crores in index options, and if you take a look at that grid that should come up for you, there was a lot of purchase in long positions in index calls as well as writing index puts. So those two things together indicate some sort of bullish trends as far as the FIIs are concerned. Another thing that stood out was the FIIs buying in stock futures for 2 consecutive days above 1,000 crore rupees. So that is something that is a positive too. The 9900 put, that one saw a lot of writing. After the 9800 put saw a lot of writing in the previous trading session. 9800 put too saw incremental writing, and the highest open interest has now moved from 9700 to the 9800 put. Watch out for the Nifty Bank weekly options expiry today. The 24,000 put has maximum open interest, which is about 100 points away from where we are right now. And 24,400 call has seen a lot of writing, most active out there. Watch out for JP Associates too. That one enters the stock F&O ban.
Okay, Mangalam, thank you so much for that. But let's shift focus now to the commodity space. Remember, crude has been a bit weak for the last 2-3 sessions. To understand the reasons why, Manisha Gupta really joins us now. Good morning, Manisha. Tell us more of what's happening in the world of commodities.
Well, as you mentioned, the crude oil prices have been under pressure, and we've seen yet another.
Okay.
Manisha,
but it is really the metal space which has seen strength continuing. So you have the gold prices which have seen a bit of a rebound, even as the U.S. services data is the best in last 15 years, and you are looking at the U.S. dollar on a stronger side as well. The strength has continued more forever in the metal space, where the zinc prices yet again have hit a new 10-year highs, trading above $3,300 per ton right now. The gains have been quite immense, and when you look at the 3 major global exchanges, whether it is the LME, the US or the Shanghai exchange, the zinc inventories are at all-time lows, and that has been supportive. Going forward, with the expectation that we would look at more supply output cuts in this quarter, the support has been immense. Zinc, of course, clearly one of the major outperformers in the metal space in this year. The other one has been the lead prices. That also has gained strongly. 64% decline in the inventories in last 3 months for that one as well has been very supportive. So these are a couple of metals to keep an eye on.
Okay, all right, Manisha, thanks so much for joining and giving us all those details. Well, let's go straight to our bullseye corner then. Our contestants this week are Rakesh, Vishal, as well as Ruchit. Let's hear out what they've picked for today.
My first call is a buy call on Ganesha Benzoplast. Buy Ganesha Benzoplast. Stop loss 78.50, target 107. My second call is a buy call on SPIC. Buy SPIC. Stop loss 31.90, target 48. My third call is a buy call on Dhanlakshmi Bank. Buy Dhanlakshmi Bank. Stop loss 36.50, target 42. My last call is a buy call on Diwan Housing Finance. Buy Diwan Housing Finance. Stop loss 545, target 572.
Ashok Leyland, buy with a stop of 121 for targets of 130. Bank of India, buy with a stop of 136 for targets of 147. Century Textile, buy with a stop of 1230 for targets of 1290. And Reliance Infra, buy with a stop of 460 for targets of 495.
My first call today is a sell call in Apollo Tyre with stop loss about 243.5 for target of 227. My second pick is a sell call in Dish TV with stop loss about 74 for target of 66. My third call is a buy call in Radico Khaitan with stop loss below 168 for target of 184. And my last call is a buy call in Tata Motors DVR with stop loss below 234 for target of 247.